So a new year can bring in a new set of concerns about what 2023 could bring for our financial futures. Because as we all saw, 2022 was kind of a wild year. Inflation had a huge impact on the things we buy every day. The housing market saw prices skyrocket in a lot of places. Crypto had a great rise and then a great fall, and then some states continued to raise minimum wage as well. Which brings about the question, what can we expect in 2023? All right, the bad news, I'm no economist, but the good news is we found one to answer some of these very important questions for us. Joining me now is Daniel Altman, Chief Economist at Instawork. Thanks for joining us today.
My pleasure. How are you?
I am well and hopefully a little bit better after we get some answers on what we can expect. But we're going to do this kind of like a game show, so we're going to pull up a graphic and have you tell me what your predictions are for next year's economy. And we're going to start off with number one, what can we expect with the housing market? We saw some huge price increases. Can we see more of the same?
Yeah, I think the housing market is already entering a recession. We've seen a lot of reduction in demand. New housing permits are down. And so we're expecting a lot less activity in the housing market next year. And a lot of that's just a function of the higher mortgage interest rates. You know, when the Fed starts raising interest rates in the short term, eventually mortgage interest rates respond as well. And those rates are practically double what they were just in the summer of 2021.
Yeah, so I've certainly seen the interest rates, go up, but some of the, asking prices not as high as they had been previously. So that's good news if you're in the market to buy, I suppose. Okay, next one. What can we expect with labor and unemployment? We've seen a lot of change over the last few years.
Well, the good news is that there are still a lot of job openings out there. And the companies that have been laying off people have typically been the companies that didn't necessarily have a lot of cash flow. And they were able to survive because interest rates were so low and they could get as much financing as they wanted. That's not true anymore, so they have to shrink a little bit. But most companies are on a pretty solid footing. And it's not necessarily the case that unemployment will have to rise a lot in order for us to see inflation go down. We might see a mild recession or just a slight downturn, but I don't think we're going to be seeing huge increases in unemployment, which is good news for most Americans.
Okay, so a little bit of good news with the housing and with employment, but if the last few years have taught us anything is sometimes things start to look pretty good and then something comes around the corner and just kind of smacks us in the face. So that brings us to number three. What about the wild cards that could be out there, things we can't necessarily predict? For example, at the start of 2022, we didn't know how disasters or wars would lead to economic problems around the world. Should we expect similar situations in 2023? I know it's tough to say, but would it be responsible to at least try to anticipate something happening?
Well, we've got a few things to look out for. I mean, things could get worse in the Russia-Ukraine conflict, and that would certainly hurt commodity markets and probably send stock markets going down as well. We saw a very close to crisis in the British pension funds, which were over leveraged. And that kind of financial issue can start to metastasize around the world. And then we also have to take a look and see whether the crypto crash is going to continue and whether that could also infect the mainstream markets. So there are a few of these kind of tail risks that you've got to watch out for, which could definitely send markets tumbling. But, in this situation, when there's a lot of uncertainty, we're finding that a lot of companies are just trying to figure out how they can plan for next year. Some of that is flexible work and flexible staffing. Some of that is just-in-time supply chains. And fortunately, those things are available, and you can fine-tune a lot of the production process these days.
Okay, that's last question for you. Just for the average person out there, maybe they have a family and they're just kind of living paycheck to paycheck. It's been a rough few years for a lot of those people. Just in general terms, 2023, a little bit easier, a little bit harder, too soon to say?
Well, you've got a bunch of different pressures going on. We expect inflation to continue to some degree. Certainly, food markets are expecting at least 3% inflation. Energy prices are a little bit lower now, and housing prices may come down too, but I think we're still going to see inflation above normal levels next year. Interest rates are higher. That means credit card interest rates are reaching record levels in some cases. And all that extra savings that people built up during the pandemic when they weren't spending as much is starting to get eaten away. And that means that some of those folks that retired early may have to come back to the labor force. And all of this means that household budgets may get squeezed a little bit. And that's why we see really hundreds of thousands of people coming to our platform to try and have that opportunity to earn a little extra money via flexible work. And most of them are looking to spend it on essentials.
Well, I guess maybe not the brightest forecast, but it's always best to be prepared if that is the case. So Daniel Altman, chief economist at Instawork, can't thank you enough for coming on to explain that to us today. Thank you.
No problem. Thanks.